Kia ora, my name's Jared Kerr, Chief Economist, Kiwibank. The Reserve Bank of New Zealand met today and made their decision on monetary policy. They decided to keep the cash rate unchanged at just 0.25%, and they kept their large-scale asset program unchanged at 100 billion. They were never going to touch those two things today. What they did do was focus on the banks, and they started up a funding for lending program. What that means is that banks can get access to cheap funding from the central bank and then on-lend it into the economy. It gives us access to really cheap funding and enables us to lend it into households who want to buy a home or into businesses who want to expand at lower interest rates. So we expect to see lower interest rates from here as a result of this funding for lending program. The Reserve Bank also went one step further and gave banks an extra year before they have to start accumulating more capital. So that gives us a little bit more headroom and enables us to be a little bit more courageous in what we do over the next year and make sure that the banking system really is supportive of the economy in this recovery phase. One other thing the central bank is doing is having a look at LVR restrictions. So we've seen quite a lot of heat in the housing market develop in the last 6 months. And there's some concern out there that there's too much heat going into residential property. So what the central bank will do will consult with the banks and others in December and decide whether to reinstate LVR restrictions as of March next year. What I think we'll see is some front loading and pulling forward of activity in the housing market in anticipation. But eventually we'll see, I think, some of the heat coming out of the market next year. What the central bank has done today, I think, is a net positive. It's providing more stimulus for an economy, and it should provide more credit creation, more support that we desperately need as we try to recover from the COVID crisis.